Equity markets closed the first week of 2023 on shaky grounds as fears of recession and prolonged period of higher interest rates weighed on investor sentiment. The Sensex benchmark slipped below 60,000 on Friday to a low of 59,670 and eventually settled with a weekly loss of 941 points or 1.6%, while the Nifty 50 index fell 1.4% for the week. In the broader markets, the BSE mid-cap and small-cap indices fell by up to 0.6%. Sectorally, IT, banking and metal stocks buckled the most while FMCG shares defied the weak trend. The BSE IT index declined 2.3% followed by a 1.7% slide in the BankX. The metal index was down almost 1%. The FMCG index, on the other hand, finished with a gain of 0.4%. Analysts have attributed the recent weakness to sustained selling by foreign investors amid valuation worries. According to VK Vijay Kumar of Geojit Financial, the major drag on the market now is the sustained selling by FIIs, which have sold stocks more than 11,400 crore rupees in the last 10 sessions. China and Europe, which underperformed in 2022, are doing well as FII money is chasing lower valuations by selling in overvalued markets like India. Apart from global markets and foreign flow trends, Q3 corporate earnings, crude oil movement and inflation data will keep investors busy this week. IT major TCS will start the Q3 results session today, followed by HCL Technologies, Infosys, Wipro and HDFC Bank later in the week. Crude oil prices will also sway investor mood after the commodity slumped up to 10% in the first few sessions last week. An extended weakness in crude will be cheered by the street. Lastly, CPI inflation data in India and the US will be closely tracked on Thursday. As per a trading economics forecast, India's inflation is expected to have nudged a tad higher to 6% in December from 5.88% the month before. Besides, the manufacturing and industrial output data for November will also be on the radar this week. Technically, the Nifty index has witnessed a negative crossover on the daily chart with its 20-day moving average falling below the 50-day moving average, which is seen as negative. On Friday, the index also ended below the 100-day moving average support placed at 17,900.
The 17,900 is a crucial level to be watched out on the Nifty in the near term. Sustained trade below 17,900 can trigger a slide to 17,300 level. On the upside, the Nifty is likely to face considerable resistance in the zone of 18,200 to 18,350. Meanwhile, this week the Sensex can swing in a broad range of 58,800 to 60,900.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.